Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.2% today. This comes off of the first 2 days of the quarter. Monday and Tuesday were the best 2 days to the start of a quarter since 1938, up 5.7% on the S&P 500. So it makes a little bit of sense to have a rest day, even if we are going to go up higher. We also had some things happening today, kind of created some volatility in the day. The OPEC Plus group decided to cut back oil production by 2 million barrels a day. They're trying to keep the price of oil up as the demand maybe is dropping as things start to soften globally. That does create some potential problems for inflation, of course, if we're trying to, drive that down worldwide. So we'll see how that plays out. We also had the Federal Reserve coming out today with two different interviews talking about essentially, hey, we're going to raise rates. Market seems to think we're going to, reduce rates sometime next year. Mary Daly here in San Francisco said she didn't see raising rates at all, and lowering rates at all in 2023. Now, this is the same group that didn't think they'd be raising rates in 2022 this time last year. So, they're not always right, but it does show you very clearly that whenever the market does run, we start to hear this very aggressive rhetoric coming out of the Federal Reserve. And again, they do not want the stock market to go up. It is part of the factor for why we have gotten more conservative and even have some inverse positions because the Federal Reserve is really adamant about trying to drive down the market. You can go back to kind of the, Jackson Hole speech as really the beginning of this big downturn that we had that ended at the end of September, just as an example of what they're trying to do here. So we have to be very careful. The markets gets excited because job numbers of opening jobs drops a bit. Markets thinks, okay, great, the Fed's going to be able to pivot and start lowering rates and that kind of thing. That one of the comments that's out there that seems to be kind of interesting is that, they're going to continue to raise rates until something breaks. And then they'll have to react to that a little bit like what we saw in England, where they had a situation where it almost broke. And so that could create a big contagion event and those types of things. So, that might be the way that they do get rates down, but that won't help us with the stock market because something breaks, the market's going to come down first before they start to lower rates and respond to that. So again, we want to be careful here as far as that goes. But we are seeing, a fairly nice bounce off of that low that we established at the end of, September. So we'll see how this plays out. I still think there's some room to the upside here potentially. We did recover today from a low. It was down quite a bit more than 0.2% at one point in time. So might be some power here. I do think that the jobs report that comes out on Friday will have some fairly significant impact on the market. Again, if it's higher than expected, that could bring the market down. And if it's lower than expected, that could be a catalyst to bring the market up even further. So that's going to be the big thing that we're kind of waiting for at this point in time. So look forward to talking to you tomorrow. Thank you very much.